I've recently come across a lot of videos talking about renting versus buying in 2026, and when I watched the video, I found it was rather misleading because what was happening is she was using national data, and really, that's not exactly how you want to do it. Now, renting versus buying is an age-old equation that you use to determine whether or not it makes more sense to rent versus buy in any given market. And the reason is because it's a gauge of where the market is at, because typically what happens at the end of a housing bubble cycle is that it is much cheaper to rent than it is to buy, and the reason is at the end of a housing bubble, what happens is interest rates go up, and when you combine high interest rates with high home prices like we had in 2022, what happens is home prices start to come down because people cannot afford the mortgage and it just simply doesn't make sense to buy. And although this was true in 2022, the picture I'm going to paint with actual real world data that you can cross-reference for yourself paints a completely different picture than the picture in this particular video that I watched by Cody Sanchez. Now, I will give Cody some credit. I think she puts out excellent content, and I do agree with her message that the true path to wealth in life is by starting and buying a business or by doing something independent, because if you're an employee punching a clock, you're getting f***ed on taxes and you're never going to get rich. But the fact of the matter remains that the average American is an employee. In fact, 90% of the population will follow that trajectory from a career or professional standpoint. And so this video will be catered to someone that is looking to buy a house, whether you're a first-time buyer or whether you're looking to buy an investment property or your first investment property and you want to see, can you cash flow something? And I'm going to show you how even in a given market, in a given zip code, not just within a city, but inside of a zip code, it can vary from house to house. And so using a blanket statement like it's cheaper to rent versus buying in 2026 is just not true. It might be true for one particular house, but literally a house down the street might be priced appropriately and it might be cheaper to buy than it is to rent. Whereas another house down the street might be overpriced and it would be cheaper to rent than it would be to buy. And the truth is, when you're buying a house, there's a lot more factors that go into it than when you're renting a house. And here's what I mean. Just because let's say me and you are looking at a particular house that we want to buy and that house is priced at $400,000. Well, if I have a 780 FICO score and you have a 620 FICO score, we are going to have a different experience with buying that house, especially if I am putting 20% down because I am selling another house to buy this house. And so I have the cash available for a larger down payment, and you only have 5% down or even less, like 3.5% down or no money down in the case of a down payment assistance program, in which case you are going to be stuck paying property mortgage insurance, which is also going to affect your payment. The truth is answering the question of whether or not it's cheaper to rent versus buy in 2026 comes down to having a realtor that knows what they're talking about, understands financing. Before I was a realtor, I was a loan officer, and I've also spent the past decade of my life building an HVAC company, heating and air conditioning business, and so I understand a thing or two about financing as well as business, and those are all things that I'm going to cover in a matter-of-fact, non-emotional way in this video. So right now, I have 3 metros pulled up on my city, and all of them, and I want to start with the most extreme example of where it makes sense to rent versus buying, and that is in the market of Newport Beach. And the reason I'm using Newport Beach is because this is a luxury market. It's extremely expensive to buy a house, and so it almost always in these types of markets will make sense to rent versus buy. But that's not why people buy in these markets. You see, people buy in these markets for different reasons, which I'll touch on in a second, but I want to show you some of these exaggerated examples of how much more affordable it is. And I use the term affordable loosely because it's not affordable for the average American when you're talking about rent that starts at $5 to $6 grand a month and goes upwards of $30,000 to $40,000 a month or more just to live in a 3 or 4 bedroom house because of the location and being close to the beach. And this real estate is extremely scarce, and that's why it carries that hefty price tag. And this first home that I have pulled up is what you would call a starter home in Newport Beach, and it's listed right now for $2.4 million. It's a 3-bed, 3-bath. It's 1,100 square feet, so basically a shoebox, which, believe it or not, in Newport Beach, this is actually a pretty good deal. And when we pull this up, this is on 33rd Street. This is a prime location, in my opinion. This is right on the peninsula, and as you can see, this is walking distance to the ocean. But when we take a look at this property, what I want to show you is what your mortgage would be on this particular property, because this is going to be classified as a jumbo loan, even with 20% down. And just to keep things simple across the board, I'm going to use an interest rate of 6% because that's about the rates we're seeing in the market right now. Zillow will tell you different rates. The truth is 6% is an average rate that I would use, and it's very conservative, meaning a little bit more expensive than what we would actually expect. If you can get a little bit lower rate, that's great. But if we're planning for a worst case scenario as of the filming of this video, looking at 6% with 20% down puts us in a position where this property would have a total payment of $14,671 a month, including property taxes as well as homeowners insurance. And the reason for this is, again, because it's $2.4 million. Now, if we came in a little under asking, let's say we put in an offer at 2.3, this payment would be a little bit lower, but just for simplicity's sake, we're going to leave it at asking price. And I want to show you that this payment of $14,671 is what you would pay if you wanted to buy this property. Now, for a similar 3-bath property that you wanted to rent. Now, this is a nicer property. It's only listed for $8,000 a month. And this is a 3-bed, 3-bath. It's 1,900 square feet. It's completely renovated. It's done up. It's much nicer than the property I just showed you. So something that's actually a little bit more comparable is even cheaper at $6,500 a month. You can see this 3-bedroom apartment, which this is on 32nd Street. So this is one street over. It's 1,300 square feet. So this is actually an extra 200 square feet in terms of size. It's updated. It's more renovated. It's a little bit nicer. This property right now would only be $6,500 to rent. Now, the reason I'm familiar with this particular market is because me and my wife have a dream. Would love to live here in the winter, not want to buy here. One is getting sucked into California's tax net because we don't want to pay Nazis 17% of our income. And the second reason is obvious, that we could rent a place for literally less than half of what it would cost to buy a place. And we have no down payment that we have to tie up. A 20% down payment on a $2.5 million property is $500,000 cash that we would have to part with to buy this property. Now, again, this is Southern California. I'm talking about when renting this on a winter rental basis, which means I would be renting it 4 or 5 months out of the year max. And winter rentals are even a little bit cheaper. And landlords love doing these winter rentals because they rent these out as short-term rentals in the summer. So that way I would get to have my cake and eat it too, because I would get to pay $5 to $6 grand a month to live walking distance from the beach. When the crowds show up in the middle of summer, we'd be long gone and back at our house in Colorado. And that's why in this market, it would make sense to rent versus buy. But what about Denver, Colorado? Well, we'll talk about Denver in a second, but first I want to talk about another market, which is in the Midwest, and that's Cleveland, Ohio, because I have family in Cleveland. So shout out to Cleveland and my Midwest folk. Does it make more sense to rent or does it make more sense to buy in Cleveland, Ohio? Now, a lot of people these days are bitching about how expensive it is to buy something in Cleveland, and I want to show you a couple properties just to give you an idea. So we're going to use this, and I'm not picking and choosing the best property. I'm just picking a property that looks affordable to me or looks like a median priced home in the area and that fits the similar criteria. So the property I picked out here is $285,000. It's in the zip code of 4418. And so if we go back to, see what's around here in the area, you can see there's a property down the street for $305. That's also a 4-bed, 3-bath. It's a little bit bigger, maybe 200 square feet. There's another one across the street for $288. That's actually a little bit bigger. That's a little bit nicer property, but just for simplicity's sake, this is kind of medium priced. It's actually a little smaller, so it's not as good of a deal on a price per square foot basis. It's 2,000 square feet or $1,975, $285,000. It's a 4-bed, 3-bath, and what we're going to look at is what our payment would be compared to rents in the area. So first off, what I like to look at, and I'm going to cater this because this is more of a starter home, I'm going to cater this to someone that is a first-time buyer. And so rather than putting 20% down on this property, honestly, the hardest part of getting into your first property is normally the down payment. And so what I advise people to do is take advantage of any down payment assistance programs that they can, utilize FHA financing if they want to, because the truth is you can get into a property like this for little to no money down with those down payment assistance programs. And although I'm not familiar with those programs in the state Ohio, I can tell you that in most states it's pretty similar. And what happens with an FHA loan, and this is why Dave Ramsey, he gives this advice that I think is terrible advice, and he says you don't want to use FHA financing, you want to put 20% down because you don't want to pay PMI. But what he doesn't explain is that if you wanted to, you could actually 5% down on this property and you could prepay your mortgage insurance. And most people don't know this, and here's how that works. The lender will require you to prepay for a 2-year policy, and after that it's done. The downside is you have to prepay for that. And so what that actually looks like on paper is about putting 6% down or 6.5% down, because with a 5% down payment and an extra 1.5% that is money lost on a mortgage insurance policy, so you're actually only putting 5% down, and then about 1.5% of the purchase price is going towards prepaying for 2 years of mortgage insurance. In my eyes, I look at that as putting 6.5% down, and then I don't have have to have mortgage insurance after that. And so now I'm getting the benefit of saving some cash, because I'll tell you what, I've been in situations where I don't have money to pay my bills, or don't have cash, or cash is tight when I'm running a business. And it's a lot more stressful to have no cash in the bank and lots of bills coming in than it is to have a slightly bigger bill coming in, but lots of cash in the bank to pay those bills. And especially as a first-time home buyer, it's nerve-wracking enough as it is. If you can conserve cash and you have 10 or 20% saved, I would rather, and I would advise you to put 5% down and keep the other 15% as a nest egg, so that you and your wife aren't fighting after moving into your, first starter home and starting your life together in your new home. Because hey, nothing puts more stress on a marriage than financial pressure, especially bills like a mortgage when you're not used to that and you're a first-time home buyer. But let's go look at the numbers and see what actually happens when we do that. So if we go in here and we put 5% down, which is a typical scenario, and we don't include that mortgage insurance, and like I said, we prepay that mortgage insurance policy, so that now it comes out basically to about $20,000 down on this particular property. And like I said, in your state, there's down payment assistance programs for first-time home buyers that can cover a lot of that down payment as well. This puts us at a total payment of around $2,147. Not bad. That's, if you ask me, that's pretty affordable. But wait, Howard, look at down the street. There's this house listed for $1,725 a month, and it's a 4-bedroom too. It's only got 1 bathroom, so hopefully you don't have to shit at the same time. And if you've got all 4 bedrooms full, that's going to be a rough time when it comes to showers. So I would argue this 4-bed, 3-bath, is worth an extra, $300-400 a month, just to get the fact that you're going to have 3 baths that people can use, especially when you have 4 bedrooms. But let's look at another rental down the street. What do we have here? Another rental down the street. This is only a 3-bed, 1.5 bath. It's 1,400 square feet, so it's smaller, and it's $2,500 a month. So in this scenario, you can get more home for less money. Now, I picked out both of those rentals to show you that this will pencil on a case-by-case basis based on the house that you're looking at. And so the key is, when you're choosing a property, if you're working with a realtor that understands this and is savvy enough to actually look at these properties on a case-by-case basis, so that when you're underwriting a deal, you can make sure you're getting a good deal, number one. Number two, you can look at the rent versus buying equation so that you can advise clients properly. Because the truth is, I've been telling clients and people for the last 4 years that it is not a good time to buy, that we are in a little bit of a bubble and we're going to have a softening because the Fed jacked up interest rates, which, although those don't directly correlate with mortgage rates, mortgages compete with treasuries as a security. And so that's why mortgage rates go up as well. And now that mortgage rates are starting to come down to where we're at 6% and even under 6% in some cases, things are starting to get more affordable. But it's not just the fact that interest rates have come down, it's the fact that in most metros, housing prices come down. But that's because Cleveland didn't see housing prices go up. And that's because Cleveland has a nickname as the mistake by the lake, because it's fucking cold and it's right on Lake Erie. So it wasn't the place that people rushed to during the pandemic, because you can't really go outside 9 months out of the year. Anyways, I'm just giving Cleveland some shit because I got family there. But as promised, now let's take a look at Denver, Colorado, which is my home market, and we'll see, does it make sense to buy a home, or does it make sense to rent in Denver, Colorado? Now, the homes I have picked out in Denver, Colorado, I want to show you in one specific zip code. This right here is 80112. Now, this home I picked out is $550,000, and when it comes to looking at a 4-bedroom home, we have homes starting at $550,000. We have homes over $1 million. We have homes in gated communities that are bigger, that are $3 million. Homes that are all over the place. I'm looking for median-priced homes in this zip code in terms of median amenities, in terms of what we're looking at for square footage. And this one fit the bill. It's 2,600 square feet. It's a 4-bed, 2-bath, and it's moderate in terms of it's a single-story ranch. It's got a basement. It's a 4-bed, 2-bath, and it's listed at $550,000. Now, what would your payment be on this particular property? Well, right now, Zillow is always going to default to putting 20% down. But like I said, we're talking about first-time home buyers here. If we're talking about a realistic scenario, if you were putting 20% down, that's $100,000 that you would have to put down. This is why the average American or the average Denver person can't afford property like this, because at 110 grand down, when the median income in the city is something like $80,000, that's not going to pencil. How long is it going to take you to save that money? And so if we just put 5% down and we prepay our mortgage insurance, which again comes out to about 1.5% of the down payment. And so that's why I just put this here in this down payment to give you an idea of what that would do. And then we cancel this mortgage insurance, so it's not included in the payment. You could see our monthly payment would be about $3,500 a month. It's quoting us at $3,465, and that's if we paid full price at $550,000. And I wouldn't pay full price on this property because right now If you watch one of my other videos, which I'll make sure to link at the end, where I talk about the housing market and the state of affairs, you'll know that in Denver, we have the largest amount of inventory that we've ever had on record, which means that we are in a solid buyer's market, which means there's lots of inventory to choose from. And so if you came in a little under asking because you absolutely loved this house, and you still wanted to get it and you wanted this particular property, you come in a little bit under asking. Chances are, if the seller's reasonable, they're going to take it. And because this is priced to sell, it looks reasonable to me. And so I don't know how much of a discount I would offer. Either way, at this point, we're looking at a $3,500 payment for this property, which I agree, that's pretty hefty, but wages are a little bit higher in Denver than they are in Cleveland, which is the other property we just looked at. They're a lot lower than what they are in Newport Beach, and we saw what the properties went for there. So what do the rents go for in this particular zip code by comparison? Now, this property that I picked out here was the closest comp because it was actually a little bit nicer. This is a 5-bed, 3.5 bath. It's going for $3,900 a month. There's a problem though. This one's right on the highway, so this is going to have some road noise. That's not a property that I would really want to buy or live in. What about this property over here? This is $3,100 a month. Well, the problem with this is a 4-bed, 3.5 bath, but it's only a townhome, so it's not an apples to apples comparison. A single family residence is always going to be a little bit more desirable because you have a yard and you have a front yard, and it's just, you have a garage and a little bit more space than you do in a townhome like this. But that's $3,100. And then we have some more townhomes that are starting at $3,500 a month for the 4 bedrooms. If you go in the same zip code down the street, here's a newer updated property. This is $6,500 a month, and that's also considered a townhome, but it's 1,000 square feet bigger. Here's one that's similar, but it has 2 extra baths, and it's an extra 400 or 500 square feet. This is 3,100 square feet, and that's $3,900 a month. And then we have one that's right off of Arapahoe Road, which is a busy road, which again, you're gonna have some road noise on this one. This one's actually priced very affordably at $2,900 a month. So if we look at this property, this is cheaper to rent, and it closely matches the property we just looked at. But again, it's not as desirable as that other property because it's in a little bit better area. You're not gonna have the road noise. And guess what? If you wanna lower your payment from $3,500 down to $2,900, all that means is instead of offering $550,000 for this property that we just looked at, you could instead offer $500,000, which is just under a 10% discount, and voila, you're at $3,140. You're almost at that $2,900 mark. And so the truth is, if someone's trying to tell you that it's better to rent than it is to buy, or it's better to buy than it is to rent, it's going to vary on a property by property basis. Within a city, it's going to vary on a zip code by zip code basis. And the truth is when interest rates drop and 2 years or 3 years from now, you decide to refinance your property, check out what happens to this payment when we go from a 6% rate down to, let's say, a 5% rate, which is not that unrealistic of a thought because the chances of interest rates going to 5% within the next 2 years is very likely with what the Federal Reserve has told us about where they're setting the federal funds rate. And look at what that does to your payment. At a 5% rate, now your payment drops to $2,884, putting it right at neck and neck with this $2,900 a month property. It's cheaper than some of these other properties in the area that aren't as desirable. And the truth is that it would be lower than that $2,800 a month because in your first 3 years, you'll have paid off a little bit of the principal. So if you did refinance into a lower rate, you'd be refinancing a lower principal amount, meaning that you're going to have a smaller loan balance with a smaller rate. So you're going to have a lot lower payment because it's actually based loan balance as well. So that's the truth about renting versus buying in 2026. It's going to depend on the market. It's going to depend on the house. It's going to depend on the zip code that you're looking at. And it's going to depend on the individual house on a case-by-case basis within that zip code. And so it all comes down to understanding this so that when you're looking at this data, you understand how to get a house that makes sense for your specific situation and how to buy something that is below that rent versus buying threshold, or that something that you like that might be a little bit more than what it costs to rent, but you're getting a house that you actually like. And for me, it's worth it to pay a little bit extra to get something I like. And most people tend to feel the same way. Let me know what you think in the comments. Do you think it's a good time to rent versus buy in your area? For the record, the reason I used Zillow as an example is not because Zillow is some professional realtor tool. I use Zillow because it's a tool that you can use and you have access to, and I don't want to sell you some tool behind a bullshit paywall just so that I have to force you to buy something. I'm literally trying to give you a tool that anyone can use. You can go figure this out for yourself and do this in your zip code, in your area. If it makes sense to rent versus buy in your area, because the truth is across the nation, it's starting to make sense to buy again. In the next 2 to 3 years, we're going to be staying in a buyer's market. We're going to get more favorable financing terms, and it's going to make more and more sense to buy as housing prices continue to soften a little bit. And if you're worried about housing prices coming down after you buy something, the truth is if you can afford the property, in my experience, unless you're deciding to be homeless and you want to go camp on the side of I-25 like half of Denver, but seriously, like what are you going to do? Are you going to like RV life it? Okay, then go chill RV life. If you're gonna rent somewhere and it's basically the same to buy, who cares? Because 10 years from now, I guarantee you'll be in a better position, because that's what history has shown. And that's not my emotions, that's not my opinions, you know, when I said, and that's just the facts. So I hope you found this helpful. And as promised earlier, there's a few videos popping up on the screen right now. So check those out if you haven't done so already, and we'll catch you on the next episode. Peace.